Another sign of the growing acceptance of litigation finance is the willingness of more and more institutional investors to commit capital to litigation finance enterprises. Many of these institutional investors are associated with educational institutions or pension funds. Given that these kinds of entities do not want to be associated with anything disreputable, it means something when they vote with their dollars to support litigation finance. In February, the University of Michigan invested $50 million with a litigation investment fund. This investment was part of the university's long-term plan for its $10.5 billion endowment. The following month, Hartford Healthcare, located in Hartford, Connecticut, committed $20 million to a different litigation investment fund. The Aurora, Colorado General Employees Retirement Plan, which has $460 million in assets under management, is considering an allocation of at least 5% of assets in corporate litigation finance, according to David McConico, chairman of the pension fund's board of trustees. These decisions were driven by the recognition that litigation funding provides an important means of diversifying a portfolio. It's uncorrelated to economic activity, explained David Holmgren, Chief Investment Officer at Hartford Healthcare. So in a sense, it's like the traditional inflation protection investment. This fits in with that diversification bucket, but we also do want income-producing and asset-backed assets in this allocation. This quality of litigation finance as an investment is generating more and more interest among institutional investors. One manager of a litigation investment fund notes that we've seen more interest out of the endowment world, but pension funds are starting to look now too. Many of these investors see litigation finance investment as an adjunct to investment in corporate stock. Many litigation funders work with corporate clients who seek funding as a way of spreading and managing their litigation risk. Of course, litigation funds are attractive to investors because they produce lucrative and reliable returns. Hartford Healthcare's investment returned 11.5% versus the custom benchmark's minus 0.6% return for the 12 months ending on June 30th. Aurora returned a net 11.38% for 12 months and an annualized 7.32% for 20 years, both as of July 31st. If you need help with litigation funding, call or email me today.